Okay, all you devils, here we go. Friday, let's see, it's about 1:15 for me. Well, of course, we're going to start with Bitcoin here. I've got maybe 3 or 4 other assets here that look pretty interesting. So here we go. Okay, so this is I'm on a 3-hour here. This is the count we've adjusted over the last couple of weeks, made an adjustment here. And now to allow for this to extend here, the yellow line up here is our all-time high. So, let me get this will probably do it. So from this low here, we're going to go 1, 2, 3, 4, and it would appear we're heading up here for a 5 to break that all-time high. So as I always encourage you to do we have the right look? Yeah, it sure does look like it. Yeah, I mean, so it certainly looks like we have the right look. Okay, it's getting a little squirrely in here. There's a little bit of a, every Elliottician is going to adapt based on, what comes. We could consolidate here. This could turn into a triangle here, but this is always the case. Every time I do one of these videos, right, it's just a snapshot in time, right? It's amazing me some of the nasty comments I get about people that don't seem to understand, right? It's right now, this is a reasonable count. It's certainly a valid count, but things change Friday to Friday. So I do get some people that really don't seem to understand that. Anyway, right? So nonetheless, 1, 2, 3, 4 looks like we're extending for the 5th. Now, of course, breaking the high would be a break of structure. So what do we anticipate? Not what do we know, what do we anticipate after a break of structure? Well, that would certainly tee up with the idea of a completed impulse, right? If we're going to sweep the high, we don't have to wonder if there's liquidity up there. We know there is, right? So it's just like every major pivot, right? Well, damn near every pivot is liquidity, right? Because there's stops sitting on both sides, right? That's how we're all conditioned to trade. So we know there's plenty of liquidity up here. So you can certainly see a potential for this to come up here. So we finish this 5th, and then we start a deeper retracement, right? Freak everybody out. There will certainly be buyers that will take the breakout. Of course, that's a personal decision you make. Is that consistent with your trade plan, right? That's the antithesis of what we would teach you. But that doesn't mean it's not going to scream higher. Right, so it's just the risk reward. That's really all it comes down to, right? Is the risk worth the potential reward? Right? The risk being that we sweep the high and we start a deeper retracement, having completed an impulse, right? We again, could we extend further? Right? Yeah, of course, right? The market is not obligated to do anything ever, right? I feel like I have to say that every week. The market's going to do what it's going to do. We're just trying to use Elliott Wave, right? 97 years of precedent. What do the markets typically do? What is if we're in an impulse? What do we anticipate following? Do we know that we're going to? Do we know this is going to happen? Oh, sweep and go down. No, we don't know that. There is no knowing ever. Nobody knows. Don't let anybody tell you they know, unless there's insider trading, which of course happens every single day, right? So, that Foot Locker deal was just obscene, right? If you dig in a little bit about that, right? Somebody always knows, right? That corruption is just part of human nature. So if somebody can get an advantage and they know something, they're going to do it, right? Because that serves their needs. Okay, well, I got off to a rocky start there. Okay, so here we go. We're looking for a 5. That's all we're doing here. Now, can you buy this? Well, how would you stay consistent with a reasonable trade plan here? Well, you'd have to take the range here of the proposed, right? Do we have? I'm on a 3 hour. Let's go to a 1. Do we have a 1-2? It's okay, right? It's certainly potential, right? Now, as I said, right, this could turn into a triangle. We could just end up kind of consolidating here, right? Building up the buying pressure, right? So it's often as we. And you could see this whole thing could just become a 4, right? We're not progressing the trend. We're in a range, right? Very typical. We had the impulse. Now we're rebalancing, right? We find balance up here. Okay, so how could you buy this and stay consistent with a I don't buy breakouts plan? Well, or even just a, oh shit, am I on long shit? I'm not. Okay, even just a, well, let's just take the range right here. Okay, premium or discount? Well, if you want to be really aggressive, you could take the proposed, right? Proposed wave 1. Okay, where are we now? Premium, right? So, okay, so how would we justify a buy here? Well, if indeed that's the 2 here, we've got a 3 coming. Well, we need a 1, 2. Now, could it be here? Oh, shit, now we're down to a 15-minute, right? Now, so you're really digging here, and of course with Elliott Wave, the further down you go in time frame, right? You get down to the 15, the 10, the 5. It's so squirrely, right? In fact, I advise against it, right? We always tell you, if you're doing Elliott Wave, 60 minutes or higher, right? You're going to see the waves. You're not going to change them every 5 minutes. Okay, but so what's the point of coming down here? Can I really see, can I validate a count here or invalidate? How could this fly? Well, the only way this could fly, well, pardon me, I shouldn't say it that way. What I can see here is if that's a 1, 2, and that's dubious as it is, right? Because is that your 2? That's a 3? Not so sure about that. This looks like a 5. So it looks like you got an ABC here. Just an impulsive rocket. That's not much of a retracement, but I do get a 1, 2, 3, 4, 5, right? So is that an ABC? Even there's almost no way to fudge it, right? This is just a free fall. Oh, I guess you could. It's, is that an Elliott shuffle? Yeah, that's an Elliott shuffle, right? Oh, I want it to be this, right? So, okay, there's your 3. Oh, well, I guess you see it here, right? So, are we calling that a 3? You probably talk yourself into it. I would be uncomfortable putting a lot of money on risk on that. I wouldn't be very aggressive up here doing this kind of 15-minute Elliott Wave analysis. Okay, we're gonna allow for that. Okay, can I still do it? Okay, well this would have to be A, B, C. Nope, that doesn't work. So this would have to be 1. You're going to call this a 2, and then another 1, 2. Right, so if it's A, B, C, well, now you're back to thinking, okay, wait a minute, some sort of triangle is going on here. Let's go for the bull count. Could this be 1, 2, 1, 2, and we're going to go 3, 4, 5. Oops, oh shit, here. There's a good example of why you need to change degrees and colors, because you'll do this to yourself and just make it harder on yourself, right? No need to do that. Okay, so 1, 2, very, very accommodating Elliott count, followed by another 1, 2. So this has to go up here. So all of this goes up. Okay, well, let's just see. Can we do it? 1, 2, 3, 4, 5. Well, of course, we got to change that color. Oh, here. Well, I guess we'll got to do it here. Let's go up to sub here. Let's put this one. Micro is fine. Let's go to green. It's always a good. It's just a good habit, right? Oh, then this probably would have to go up. We'll take this up so we stay consistent. Okay, 1, 2. 1, 2. Very accommodating count. 1, 2. Okay, well, is it technical? If this is the 2 and we got another 1. Nope. Surprised? Shocked? Probably not. Not if you follow not if you're a member. Not if you follow my content. Okay, 1, 2. All right. So how did we do here? Did we get back to backs? Well, no, we didn't quite make the golden. You got into that little pocket here between these two inverse fair value gaps. You came back to this imbalance here. 1, 2. All right, you're in the zone. 1, 2. Not a great start to a 3, right? So you're working too hard for it here. See, I guess is my point. One, down these lower time frames, you're working really hard to try and get something bullish. Come on, right? I want to buy it. If you want to buy it. Is that the point being? Is that consistent with the discipline of your trade plan, or is it? We're down here in a 15-minute. I mean, how many times if you're tracking the 15-minute, how many times are you changing this? Wouldn't you have thought, oh, the 2 is here. Oh, what? Maybe sweep the low. Oh, so wait, we got to change. Right, see, it's just so much harder out here. So I really encourage you. Let's go back to a 60-minute and see if it looks any easier to get a handle on this. I take you back to how could we see this? A, B, C, D, E. Certainly a candidate. We all want it to go, but wanting it's very different than being professional about how you approach risk and money management. If you just want to take a ripper and, throw in, X amount of dollars and okay, let's hope it goes. Well, okay, you're not a professional trader. You're not even approaching it with even a business mind. You just like, oh, fuck, read it. I don't know. It's going up. Let's buy it. If that's who you are, then that's who you are, right? That's not what we're trying to teach you here. But other people will look at this and watch one or two of my videos and go, oh, fuck me. Are you kidding me? I got to do all this? Oh, come on. That's not worth it. Choices, right? These are choices you have to make. Is this harder? Absolutely. Is it more profitable? Well, that depends on the individual, right? That's your discipline. Right, we can talk TA, the Elliott Wave and Fibs and market structure all day long, but that's not going to make you successful. That's the hard truth of it. All of this, you can master Elliott Wave and still be a massive loser in the market. In fact, most are. That's the harsh truth, right? Because it's really, sooner or later, you're going to realize that this is the assist to get you to execute your discipline. This helps. Again, it didn't have to be what we teach, right? It could be whatever, right? Fuck, it's moving average, something, right? It's that won't be what determines whether you're profitable or not. That won't be it. Well, this goes up here. It's you, right? It's between your ears, right? That's what determines your success, right? Your discipline. Can you stick with a plan? Do you have do you have a plan? Do you have a methodology, right? We teach a methodology, right? That's why every video is the same as the last 6,000 videos. It's always the same approach, right? Because that's what let me rephrase that. That's what we believe gives us an edge. I've been doing this a long time, right? In my mind, this is absolutely an edge. That's why I teach it. So, okay, all right, I'm rambling. All right, so would I buy it here? Definitely not. Now, that's easy for me to say. I should caution that because I'm very long Bitcoin. But this doesn't look like a great place to be adding. No. So, see, there's the kind of comment. I'll get wrong again, right? That's the kind of shit I get. If we take off out of here, right? Oh, well, you're wrong again, right? You're always wrong. Right? Yeah, people, again, things they'll say in a comment, right? They probably wouldn't say to your face. 3, 4, 1, 2, A, B, C, D, E. I personally, I'll just wait for a little clarity. Well, there's another comment, right? I happened to see a guy comment the other day. So much analysis to get to I don't know. Well, what would you rather I did, right? Just say, okay, we're not looking at Bitcoin today because I don't know where we're going. That's very valid, right? If that's how you all feel, right? Drop me some comments like, hey, dude, if you don't have an opinion on it, just fucking skip it. All right. Things to consider. I don't know. I'm not buying this because I don't know what I have here. Period. If I don't know, I don't trade. Period. When in doubt, stay out. Right? You should learn that pretty quickly. Okay, all right, there's Bitcoin. I don't know what we've got here, but I think the probability of sweeping that all-time high remains very high. That's what my bias would continue to be bullish. Sweep the high, then I'd look for the retrace. All right, so there's Bitcoin. Oh, I had a request here for someone. I was over on one of the video or two ago. Someone, hey, could I get an update on AVAX, right? This is one, I've got a piece of this. Again, not that should ever matter to you. Well, let me take the market structure off of this. All right, so this is, I teed this up because it's a really nice example of, again, discipline, technical analysis, rules. There's a lot going on here. So if we back up here to our low down here, what, $8, it sure looks like we get a good impulse. All right, and it would be very easy to have looked at this and said, oh my God, look at this. Oh, I got a 5 followed by a 3. I'm right into the golden zone. Holy shit, I got a golden corner. I know I've got 80% odds of getting there. Oh my God, look how 80% is not 100%. Another thing I feel like I have to remind people, that's a drop dead perfect setup. Well, Dr. Andrews also gave us trading principle number 4, a failure, right? And this is key. Oh, come here, Errol. Failure to make the median line sets up a move equal to or greater than the swing that failed. There's trading principle number 4 right in your face, right? And here's an algo, right, that did not make its target, right? Just because they're there, remember, for everyone that makes it, there's one that fails. So this is on its way. It's on its way. No. So what do we end up with? A 5 followed by a 3 with a couple of daggers down here. So we get like kind of a tweezer bottom down here, and that's a good sign for a potential revisit to this. Now, we've lost the algo from the low, right? Big Al is gone, right? He's not here, but I still have a corner pocket. Right? That doesn't change, right? So, okay, so maybe you had a loser, a scratch, or a small loser here. If you were buying down in this range, okay, shouldn't have been, even if you use 707, that should not be a death blow. You may still be in it, right? If you're long, right? If you're a long-term trader. 707, right? If that's me, then I typically will put my stop under the 707, so I'd be out. Okay, but I know I have a new corner pocket, right? Again, it's not golden, but it's a corner pocket nonetheless. Meaning from this low, right? Those odds all start again. The difference is I don't have Big Al with me. I still have a corner pocket with 80% probability of getting there. So don't let the fact that the first one failed, even though that was sweet, right? Don't let that keep you. You got to be able to get back in the ring, right? Take another swing. Let's finish it out. So why, right? Staying consistent. Why would you do that? That's why. If this is going to go into a 3, well, we need what it's not. Again, I like to say it this way. What happens here is not optional. That has to come, or this analysis is incorrect. Now, your analysis being incorrect is also much like taking a stop, something you need to get used to. Again, Elliott Wave, any TA, whatever, it doesn't matter, right? We have a moment in time here. There's a snapshot based on what we can see at this moment. So if I dig in, I'm on a daily, right? If I dig in there, what could 1, 2, 1, 2 could be? Yeah, could be. Sure. 1, 2, 3, 4, 5. Why not? It's a 5. I'm coming off a low. I've got all the ingredients here for a good low, right? Ingredients. Number 1. Did we sweep some liquidity? Yes. Did we get anything really? Oh, any massive displacement? Well, we got a pretty good one here. Pretty good fair value gap here. All right. Tapped. 1, 2. So this would now be your order block. All right. Then we could just call this a demand zone. If we come back here for a revisit, don't know. Oh, come here. What do we got? Demand zone. Okay, that's good, right? So, well, you could probably even bring it down lower, right? So we've got the fair value gap, which you can now barely see. There it is. So we got an order block. Oh God, here, let me get that order block displacement. Okay, so let's label it, right? So again, it's trying to be consistent. It's kind of a big degree there. 1, 2. Let's get you right on the corner. It tends to move a bit when you change time frames. Why would you not think that? Let's get this one out of there. Okay, 1, 2. What? You have an alternate? Can't say I hate that. Al involved. It's a bit thin. They're not always going to make it. So if you're down here waiting between the 50 and the golden zone, oh, they're leaving without you. Another thing you need to get used to. Here, you can look at it this way. Here's all you could just call this down here, unmitigated order flow, right? Gets right to the median, right to the midline of it, right? If you want to get really tighten that up. Oh, what did we get? Anything down here? Oh, it's just the F. You get the idea. I don't know that it matters. 1, 2. Okay, well, now what do I have here? Is your first thought to do that? No, probably not. If we do something like this, trying to stay consistent with coloring here, so that's white. Okay, let's stay in white. What likely, come here. This is going up here. Because we know, right, we can just, again, don't have to take my word for it, just measure it. Where do they usually go, right? Well, here's this, here, got degrees of common extensions. Now, typically we use the negative 100, but because we're shallow here, we didn't make the golden zone, right? So you could certainly see how we could do the 3 here and get a 127, 128, right? Again, we're digging out of a hole here. Now, so with that established, we know if indeed this is going to play this way, right? This is kind of the key to the whole thing. If it's 1, 2, well, this is again not optional. There has to be an impulse here. Well, it looks like something has topped here. Again, just playing by the numbers. 2, 3, 4, 5. All right, so let's take that down a degree. Again, just process. Hopefully this is a lesson of how you would approach something like this. That's the whole idea. That's why I do these videos. So you kind of a demonstration of our methodology, and then you decide, right? Okay, right, so I had a little interruption there from my Windows, I guess, apparently. Running out of disk space. So I had to do a little restart there. Okay, right, so here I was just finishing up my point being, right? If we're heading out of this with an impulse, right, we can anticipate what's to come. Right? Again, the whole point being, if this is correctly identified, right? So right now, snapshot. Okay, we'll see if it develops. Again, could easily turn into an ABC. We roll over here, and then this analysis is incorrect. Won't be the first, won't be the last time, right? Just you're going to have to get used to it right now, right? So what's your alternate, right? Say, well, I'm just not going to trade it. I'm not going to trade it until it's absolutely clear that I've got an impulse here. Well, that's not necessarily a bad thought. That you confirm, right? Because you're not going to, if indeed this is going to go here, right, to get to realize the 80%. Okay, well, if you wanted to be a little bit more conservative, you could literally wait for this and then take that. You've got so many choices right now. Again, the market's not obligated to do that. We don't know that it's going to do that. Right now, that looks like a reasonable expectation. If this all completes that 5 and I come out of here, well, I haven't made the median line. So the expectation would be, okay, maybe we come back down here to POC or a high volume node, and then we go again. Let's see, right? So that would, oh shit, I can't even do it on it's too big, right? Because we've got all the way up to here to get to. So don't feel like, oh man, I can't trade it now. I missed the first impulse. Did you? All right, the bigger question would be, if you catch the first impulse, are you taking profit here and reloading here? You know, taking the risk that, oh, well, it's always a very shallow, right? Remember, we looked down here, it didn't make a 50. Oh, it was a shallow retracement here, and then it took off without me. Once again, get used to it. It's going to happen. You can't cry about that. The point isn't, I missed the trade, or I made the point is, did you follow your rule set? Did you follow your discipline that you're expecting yourself to execute, right? To be profitable. Because if you don't have that, just a matter of time. Well, certainly the odds would say you're not going to be profitable. So wouldn't you want to do the things that would increase your probability of being profitable? Just, simple stuff. Right? Don't get overly caught up in the TA, right? That won't make the difference. Afraid to tell you that. From a guy who teaches TA, right? That will not make the difference. You make the difference. You're your best edge. Okay, I think that's, one other here. This is from a live stream here. I've been trading this. I like this. Somebody teed this up in one of our, I think it was a request off of X. The 1, 2 here, I think when I was first looking at this, I thought maybe 1, 2, 3, 4, but with this extension here, it does look like we've got a nice, here's the 1, 2, 3, 4, 5, 1, 2. Right, high class problem. Oh, I need another 1, 2. So, because certainly you could have put the 3 here and thought, oh, 3, 4, 5. Oh, it's, well, but, some of that is experience. Okay, 1, 2. 1, 2. Well, okay, was it technical here again? If you just caught the last live stream. Oh, right to a 50 here. 1, 2, 1, 2. I think this was a 50 as well. 1, 2, 1, 2, 3, 4, 5. All right, so still trying to get that 3. And as I would always remind you, where are we going to find that resistance? It's going to be at the golden zone. From that, and that's from the B high. You'll have, well, again, reminder, what will the algo do? All right, if you break this one, it'll just go to the next one. Right, that's what it does. All right, so it's gonna. So you break that one. Now that golden zone from the B is the 50 from the top. So, but it looks like it's underway again at this moment in time. This snapshot in time certainly looks good, right? So there's a trade right there. Oh, let's see. I'm on the aggregator here, so of course. Now working with Femex, right? You could kind of tee this up, and that's what I did. Tee this up in Femex, and you got a shot. I mean, you know, you're not swinging for the fence there. Nice single. What do we get there? Yeah, if you bought it today, I always like to try and give you a trade if it's there, based on the moment in time we're evaluating. Pretty low risk. Oh, you might give it a little room here. Come here. Lowest I'd give it. I can't get you on there. There we go. Oh, my machine's bugging out today. I'm gonna have to free up some hard drive space. Okay, 1, 2, 3, 4. 1. Could you go? You might wait. You know, maybe sweep that last pivot high here. Oops. You might look at this. All right, this would be your market structure shift. Oh, I wouldn't get too caught up on the labels, right? Something will have changed here. Lower low, lower high, lower low, lower high. Okay, well, we can keep it simple. Something changed. If you want to catch that. So the idea would be get in there, wait. Come here. Wait. Do you get a nice 3? Ready to go. Okay, I'm going to finish here with, what have I got teed up here? Oh, here, before we go to the finale, let's go over to gold. I think there's a lot of people tracking this, right? It's interesting study case here. It's truly a challenge for an Elliottician, right? This is not an easy count. I'm going with, you know, I would call this my best guesstimate here. The 1-2, pretty reasonable right now. I am in log scale. You know, if you look here from 9 to 3 to, you know, it's judgment call, right? Judgment call as to whether or not you've got the requirements here. You're right on the edge here. So if you go to log scale here, okay, well, if we do it this way, it's still very, very practical here to come for a 50% retracement. That's a log scale 50, but a 50 nonetheless, and it makes sense with where you know, the order block here, right? So we didn't get a full mitigation here, but you got enough there to where, okay, that's an understandable pivot. Of course, when we take it out of log scale, right, we're going down to the golden. 1, 2, right? So let's keep it in a log scale. 1, 2, well, there's an impulse. 1, 2. Well, it depends how you count it, right? You can count it a couple of different. 1, 2, 3. This is a little pivot here that sweeps that low. You'd have to use that, so you'd have to have a flat there, and then finish with that 3. This gets very tricky in here, and we've got an impulse. What looks like an impulse here. These are just chop monsters here, so a lot of chops. So WXY seems, a WX seems reasonable here. A, B, C, A, B, C. Now that's impulsive. But pardon me here. I don't want this to be impulsive. Here, pardon me, my mistake, right? I want to do an A, B, C here, and because we need that to be a 3 for a triangle. So can we make that work? Well, here, let me finish it so I'm not being lazy. Okay, all right. So there's your 5. Let's go minuscule into an A. B, not a beautiful 3. Oh, so this would now have to, and the reason I need to do that is because if we're going to do a triangle, it has to be a series of 3. So A, B, C, A, B, C, A, B, C, A, B, C, and then E is just kind of a little turd burger in there, but okay, right? So can we make that work for E? You know, it's notorious underthrow, overthrow, right? It's kind of a wild card. But because I don't get a good launch here, this seems like a reasonable, you know, you're trying to identify the 4, right? What's classic for the 4, right? We go sideways. So note, I'm on a 3-day. Right, this is a tricky count. It does look like 1, A, B, C, impulse, W, X, A, B, C, D, E, right? So it's WXY. And then we shoot. So forgive my little brain fart there. That does have to be a 3. So ABC, 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 ABC. Right, and off we go. Okay, so 1, shallow 2. Right, again, this kind of count here that likely you'd have disagreement among elitists. Right, it's a very tricky count. But what coming off of this? Okay, 1, 2. Well, that's a little tricky as well. Shallow 2, 1, 2. It's not 1, 2, 3. So 1, 2, 1, 2. That looks like a good 3. And now that's separating here. So it looks like, okay, working on a 4. I got a nice, let's go back to a daily. ABC into a 4. Looks like that's a reasonable shot to get the 3 at the median line. Remember, we're still working off of the corner down here with the expectation that we're going to achieve our 80%. We're going to get that median line. So that's a daily, right? This is the tricky part of it. And it's the kind of count where you're like, okay, what? Wait, what? Oh, wait, what? What? Oh, triangle. That's what I just went through in prepping this video. I think that's what you got there. 1, 2, 3, right? Certainly long enough for the 3. Note here, we don't break the high. Little pause here. Consolidate. What are we doing? What are we doing? And then launch, right? So this is for those of you who say, well, you say don't buy the breakout. Well, yeah, right. If you're waiting for this to break and retest, right? You missed it. Get used to it, right? Did you get something here? Well, you got a 50 there. This, I believe, also another 50, right? There's certain markets that they like 50s. Gold seems to like the 50, although here we get a tap towards the golden zone. It's kind of right in the pocket. 1, 2, shallow, right? Unusual, very, very strong. Shallow 2, man, you got a rip-roaring strong market. 1, 2 again. It looks like it's maybe a flat there. Oh, shit, I'm on a 3-day. It's hard to read that. What would you have here? Looks like it'd be there. A, B, C. Even that's a little wonky. That could be WXY. At this point, it doesn't really matter, right? So, okay, it's likely, right, to allow for more time, less likely to be there, right, because that looks like a straight shot down. A little more complexity here would be tricky, right, because you'd be expecting it to sweep that low. It doesn't do it, right? So strength of the market. Market's always talking to you, right? If it doesn't grab liquidity because it always wants to. Oh, strong market. 3 looks like it's in. ABC, pretty traditional. Let's get some of this all out of here. I can finish this up here from the proposed 2 to that 3. Let's go to, oh, come here. Wave 4. Okay, right in the pocket, right? Obviously, you got a nice bit of bullish order flow sitting right here. Now getting tapped. We don't know that that's done. This could roll lower. It's a 4-hour. Could be done, and it could be done right here. 1, 2. Do it. This is right. No. Now, do I know that's coming? Of course not. So if that doesn't happen, spare me the, oh, you're wrong again. People do like to do that. Some oddly, why they would make a point of that, seeing as how they know I hold all my comments, so they do it just for me. Okay, and the reason I hold comments is I get blasted with so much spam. Oh, okay, I wonder if you could help me. I've got my coins over on OKX, and I want to know how to get them to Binance. I get like hundreds of those. All right, somebody's working a program there. 3, 4, working for that 5. Okay, 1, 2. Well, could you take that now? Yeah, if you want to trade gold, or you certainly could, right? Now, maybe you're not trading gold futures, but you could go over to the GLD. You can get a piece of it here with a relatively nice risk reward here. Just stop under the low. because the assumption is, oh, it's 1, 2, right? And the one thing we know is that if that's a 1, if it's a 1, 2 can't overlap that low. So the 1, 2 is one of the safer places to go because it's literally your stop is 1 tick below the low because that invalidates. So what's your risk reward there, right? You can do something like GLD. That would be a reasonable target. You could use 1 tick under the low. 2.5 to 1, right? That's tradable. You know, here's what people tend to do though. I don't know, 2.5 to 1, and I like 3 to 1, right? So they'll create a 3 to 1, and you know, here's where they usually go, and they miss the trade because they were, you know, being a little piggy. Right, where do they usually go? That's a deep 2, so you wouldn't anticipate a massive 3. So that would be a reasonable target. 2.5 to 1. Nothing wrong with that. Okay, let me keep moving here because I'm having to stitch two of these together. I think the ES, right, is really a difficult count. Now, this was the bear count that I had been considering, but I think at this point in time for this to be a C, right, it looks less likely. So I'm going to go back down to a 2-hour here. This is tricky. Now, of course, right, we have, I don't know, what would you call them, unnatural influence here. The idea being that we had a 3 followed by a 3, and now we're working through into an impulse here. It's a bit irregular. It looks like it's 1. You've got a running flat here, and then another 1 too. It just doesn't look like it's going to finish, right? It would be highly unusual, right, if not invalid, right, that we're going to go up here for a C and sweep the high. So that seems less likely. Now it does look like we got the lows in. I mean, it's far enough, right up to about here. You know, as we look at this, right up to about here. It still looks like we've got to go. Right? If this is 1, 2, if, right? If these are correctly labeled, and this is, again, I promise you 10 Elliottians give you 10 different counts here because it's so irregular. But if this looks pretty straightforward, right? If this 1, 2, and we've done the 3, 4, and we're going up for the 5, I can't get the 1 here. I can't quite make that fit. So and be valid. So the idea of 3, 4, 5 it implies that, wow, if this is really going impulsive here, and we'll look at the bull count, the idea of this being a C is fading. All right, so surprises me a little bit, right, that this doesn't get another test, but you know, there it is, right? We're just rip-roaring, right? We're up again massively today, just massively, right? Just American greed, never underestimate it. Okay, so let's go over to the bull count. Take a quick peek at that. I've got this over on the SPX just for the contrast. Now, I just because this is where it's the most difficult to read it. What do I got? A 2 hour there. Well, certainly. Oh, come on, what's that? Certainly one possibility here is that we're going to truncate this, and that this is the key one here. Because this, if you're doing it this, oh God, I got to go down to like a 15-minute to get it. That's why I had that line there. For this to work, you've got to go 1. Oh, Jesus. Here, let me see if I can draw it. Might be better. All right, so 1, A, B, and then I do get a clear impulse that takes it down for that C, and then again I get an impulse off the 1. So you're essentially you're building in another 1, 2, which is a little suspect, right? You'll note here that this is all wick down here, and it's really, there was a gap that day. Or so we go down, we go up. Oh, pardon me. Here's the gap, right? I think it was a new week. A, B, and then clearly there's an impulse here, right? It's unmistakable. Or you can't mistake it, right? It's not like, oh, I can turn that into a 3. No, that's a C, right? So as we know, we begin and we end in 5s. A, B, C, right? That gives you another 1 here. The alternate being this is, if I draw it, maybe this is easier. 1, 2, 3, 4, 5, and we're going to truncate. And then this is the 1 that comes off that low. Now, adding another 1, 2, if you're a bull, of course, is always more bullish, right? It's another 3, 4, 5 that have to complete. So let's leave that possibility here. We see the big imbalance here that came, right? Then fully mitigated. So this is kind of off the board. Now, coming out of the chute here, again, very tricky, right? Again, likely a lot of variance, I would suspect, in terms of how you would count this, right? Because it's not drop dead. Okay, I see it. It gets better as it goes. So this ABC into this 2 is actually pretty solid, right? This, I assume many of you would count it the same way. A, B, 1, 2, 3, 4, 5, right? So this, much like this impulse, this is pretty clear. Let's not be lazy. Let me do it. All right, there's the 5 down. Gives us a candidate for the 1, 2, right? And I'm kind of using that because this is question mark. 1, 2, what are we looking for? We're looking for, well, where are you? We're looking for this 3. This is all still yet to come, right? So very, very bullish. Okay, so 1, 2, 1, 2. Well, here's an impulse. Here's a 3. That's very shallow, but I got to, again, if you're applying Elliott Wave, right, we can't leave an unaccounted for impulse, right? We've got to put it somewhere. We've got to account for it. Here's an impulse down, impulse down, impulse down, impulse up. 1, right? It's not going to be 3. 1, ABC into the 2, right? Shallow 2, strong market, right? That's the 200. That's the God MA. That's the average of the EMA and the SMA, right? It's good. It's just a nice little, it's a screensaver because the Vegas wave will be right on top of it. 1, 2, right? Then again, another 1, 2 here. It's a little bit, not quite a 50. I can't remember if it made a 50. Not a little shy of a 50. But let's get our right here. So for a 1, 2, okay, holding the 200 makes sense. A little shallow. Okay, we double bottom there. What did we do? Right? Do we, a good low kind of thing that you would look for in a low? Did we sweep some liquidity? Yeah, we did. Okay, all right. So we got some liquidity. Pop in a 5. 1, 2. Right. Again, shallow. Now because it's the SPX, right? We're getting the gaps. Big gap. 3, 4. It looks like we're going up to complete that 5. We may be doing that today. So that out of there. So following along here. Oh shit! Let me go to here. Get it wicked off here. All-time high. Looks like that is in the sights of the algos, right? We have no confusion about whether there's liquidity up there. So if this is going to continue, 3, 4, 5. All right. Again, so the big one, the white one, the big white, all implies okay, we're going up. Right. You're seeing many of the big name firms upping their projections now after this on the assumption right now with, you know, you can call it brilliant negotiating. Others might call it complete capitulation, right? He gave in, right, and backed off on the tariffs, right? That's probably too political, but what do we care, right? All that matters is money. 1, 2, going up for the 3, 4, 5, right? So this is all still very bullish. It'll be a high-class problem, as I said, to put that 1, 2. Now, what gives me pause here on this that I continue to refer back to, I've kind of been emphasizing this, it's a little bit of a disconnect. Now, rates going higher would be problematic for this bull to just continue to rip roar. I'm not saying it would kill it, but it's going to make it more difficult for this to just, you know, risk on. This is also just a great test of your Elliott skills. See what you come up with here. I never am here to tell you that my count is the right count. That's what I see. Applying our methodology, right? That's simple. Okay, so what's the concern, right? That would slow this down. All right, we have our all-time highs. Insight. It could get there early next week. Reminder, right? If we're doing this, it's 1, 2. Oh shit! This would be 3. Oh man, we would have a big 3 up here. So at some point, because that's a break of structure, there's going to be a retrace, and then we go again. Because we're seeking not just this 3, we're seeking that 5 to give us this 3 tied to the 1, 2. Oh, by the way, there's another 1, 2 in there, right? So there's plenty of potential for this to turn into something really just crazy. right? Maybe they pull it off, right? We get all this money flowing back in here into the U.S., lots of money being committed, right? Or at least spoken of. We'll see if it happens, but lots of money on the table supposedly coming back to come to the U.S. So 1, 2, 1, 2. I'd be more conservative in this. I would just focus on the first one, on the in blue. That's what I would stay focused on. If I have to add that other 1, 2, again, very high class problem. Here's the concern, right? I've been dwelling on this over the last couple of weeks. The bonds, right? So inverse relationship to the yield. So price is down, yields up. This is just following just textbook Elliott. So we should have to look at this and go, well, wait a minute. Okay, if we're going to go down here to 108 and change, where are we now here? 110. That's enough of a drop to where the 10-year is going to get to be a challenge, right? Because yields will start to pull. There will be the attraction of that yield to pull money from the market, right? Now, this is hard to miss, right? So all you can do here is say, okay, 1, 2, 3. We come back, literally tag the 50, and this would be your expectations if we're going to finish this as an impulse. Now, again, the market is never obligated to do anything. This is just amazing. If I draw this here, you see the low volume node here. That's literally what we tick on, right? The little low volume node here, this little wedge here, and it saves the overlap of the 1. And it's right at the 50, right? We get a wick that goes through, and then we're headed down. Well, now if this is going to complete, right? Again, you just right there, right? If there it is. If this is going to complete, that's going to be problematic for the equity market. What's the alternate? No, there is one, because if I take this back to the daily, right? We may, while that looks like, right, what you're doing here is just a simple 1, 2, right? One. Oh, come here, God damn it, come here. 1, 2 is what it lays out for, right? And then that would be extremely bullish, right? So if indeed we hold here, we put an ABC into this 2, and then we're going up for the 3, well, that's prices up, yields way down, right? Yields are going down. So if that's the case, okay, great, right? Now, but I've got that impulse that looks like it's certainly working. What's an alternate here? Well, we could you can fit it. If I take it back to, let's go to a 2-hour here. You've got the potential. You'll note here the golden zone here. We got a wick, so target down here. All right, so technical. What's the alternate? Well, it does look like you could probably do this. Okay, don't be a doom and gloomer. A, B, C. Oh, shit, here, I'm going to have to do it this way. Here, I'm going to get out of here. W, X, Y. If this, allowing for the possibility, right? Remember, snapshot in time. 1, 2, 3, 4, 5. We come out of here. So this ends up being the 2 here as a WXY. And we don't sweep this low. Oops. So this is why I keep referencing, right? Members, I'm continuing to emphasize you keep an eye on this. That's why if this starts to roll over, right? If we sweep that low, then likely we're headed down for this pivot. 3, 3, 3, W, X, Y, right? Allowing for this to do that. And then it's game on, right? Certainly the Fed's getting plenty of pressure to lower rates. Everybody wants it, right? Is that the right thing to do? Well, can't say I'd be disappointed. That's totally irrelevant. What's relevant here? I have a textbook. I mean, I literally can't make it any prettier. Impulse. But there is the alternate. So how are you going to know? Well, you're not going to know. You're not going to know. Well, but you would certainly start to get a little more conviction in the alternate count here that this is done here as a Y. If we sweep the 1, right? That would make you think, oh, wait a minute, right? Impulse is broken, and I've got to get off of there. I've got a very clear impulse down to this pivot. So then you would be thinking A, B, C, right? Because it would just be a zigzag. 5, 3, 5. Zigzag. The Y is in, and we're going to go 1, 2. So you got to be prepared for both of those, right? So, why people that like to shit on my stuff watch these videos? I don't understand. But for those haters that love to shit post in my comments, how could I be wrong there? I just gave you 2 outcomes that we can't know, that none of us can know. No one knows. there it is, right? So piss off. Can't be wrong there. Right, I'm giving you two alternates. That's up to you as to what you trade, right? Where do you see but what do you see? What do you see there? This is going to be, that's going against all the momentum, all the pressure from the administration on the Fed, right? Are they going to give in? Probably not. I would suspect they won't. Okay, I'm going to wrap it there. Okay, guys, with that, I'll wish you a good day. Remember, all our links are below, right? If you want to develop the skill set and work on this, right, we can probably help you with that. Our Discord is free to join. Femex is, I don't have any Femex up here. That's our sponsor, right, for these videos here. We're very happy to be working with them. We've got a couple of relationships. Blowfin's another good one we work with. We like the no KYC, right? It makes it easy for us to appeal to, the international market that we draw, right? So if you're in the U.S., it's kind of a pain in the ass, right? But you certainly have options, right? You've got Coinbase, you've got Kraken, you've got plenty of choices here. If you need to KYC, if you prefer not, well, Blowfin and both Femex are great choices for you. Okay, guys, with that, I wish you well. Like I said, our link tree is below here if you want to get some of the things that we recommend, or you want to join our Discord, or maybe get started on the belt course. Those are all options for you. Okay, guys, have a good weekend. I'll catch you next week.